Welcome to Video EFX, the FX Trading Technology Series. Today I'd like to welcome Tim Finch, Head of Marketing and Sales at DealHub, to the hot seat. So Tim, what's driving the need amongst banks and FX trading firms to have cutting-edge deal flow management?
Well, we've seen the volumes in foreign exchange grow exponentially, and if you think back to the late 80s when most processing was essentially starting manually in the trading floor, there's always been this goal from that point to achieve 100% STP, and that's much more possible now that we have the technology to take any kind of trade from any kind of venue in any kind of format and send it downstream. And so over the years we've seen a proliferation of foreign exchange trading venues, and the ticket volumes, as I said, increase exponentially from that. So the sort of systems that we're talking about here have to cope with these very high throughput of tickets on a daily basis.
What factors might influence how firms choose and deploy a specific deal flow management solution, and how can this reduce ongoing dealing room costs?
Well, I think you'd be surprised at how fragmented some deal flow systems are. I think what you really want is a proven, reliable solution that's going to make transparent all the flows that are coming into the system. And to be able to process, as we said, a large number of tickets is essential. We need to look at the reliability of the system. We want a 100% solution that's not going to lose any tickets, it's not going to have any duplicate tickets. So all these are factors.
And what are some of the benefits for the FX middle and back office that arise from deploying a sophisticated flow management solution?
Well, in this area, you're really looking for reducing risk in the project. If you have a proven solution, it should be easy to implement. The architecture should be a simple one, but it should create a unified framework which allows you to add incrementally to the system as you go on. So it shouldn't be a new project each time you want to add a new trading venue or ECN or methodology or new deal type. This should be very simple and be just like a switch on to add a new venue in that situation.
How can flow management solutions and FX help increase STP and increase uptime for trading firms? And what is DealHub doing to tackle the area?
Well, I think the recent volatility that we've had in markets is a very good example. Some of the planning that people were doing last year for ticket volumes through their systems and the number of tickets that their back office system could cope with was completely blown away with the sort of the spikes in volumes that we saw. The high volatility in the market led to a huge expansion in the activity of the trading floor each day. And in this area, we've been working with clients who are testing for solutions where they might have up to 1 million trades per day. And these were numbers that were not in anyone's planning at the start of 2008. But the experience of this high volatility has led them to examine these kind of throughput levels.
And is interest in FX deal flow management largely confined to the sell side, or can we expect to see more inquiries from large buy-side trading desks?
Well, it's an argument now that some buy-side firms are as active as sell-side firms. So using the same technology, robust, reliable architecture that we have that's been proven in the tier 1 banks is very desirable for some of these buy-side firms. So we're seeing interest in solutions for algo risk management, where we control models that are trading on Reuters key stations or EBS AI. We're seeing interest in aggregating liquidity into a single GUI, in MIS on the banks that are offering liquidity to these buy-side clients. So in some ways, they're acting almost as banks were, and they're gearing up their technology side to match that.
What steps is DealHub taking to cover additional instrument types beyond spot FX, and how is STP created for less commoditized markets?
Well, we've always covered the entire spot market, forward swaps, outrights. We've added support for NDFs. We have money market, simple loans and deposits. We now cover options as well, and we're moving on through customer demand into the futures markets. We've always been a customer-led company, and so to some extent the customers drive us into these new markets. So we have conversations going on about equity derivatives and commodities. We already cover base metals, for instance, on Reuters and EBS. There are some new deal types which are not covered particularly well for STP in that they're in unstructured text forms. So if you think of instant messaging or Reuters conversation, where there are perhaps confirmations of options which are very complex, we have a parser and conversation analyzer system that can take all those deals details out of the conversation and create a deal ticket for each one. So you might have an option trade and a spot hedge in the same conversation, and we will create those two deal tickets for that.
To what extent are the more onerous compliance requirements under data retention rules likely to place additional pressure on financial institutions to create records of data from FX traders?
Well, in the current environment, it's clear that there's going to be more regulation. We already support the Bank of England and Fed requirements for keeping 7 to 10 years data. So a lot of our clients will have at this stage 10 to 12 years of data showing every interaction that they've had with every counterparty that they've traded with, and DealHub's been recording and archiving that in a SQL Server database for them for all that time. We see requirements coming out from the SEC for chat and instant messaging, and that banks will have to store this. And we have, as I say, the parser system which can take and look for trades within that messaging system. So we see more of this work for us, really.
With algorithmic trading on the increase, plus liquidity aggregation and smart order routing being addressed by all banking tiers, what progress has DealHub made in this space?
We've always established ourselves in the STP market, but since 2005 we've moved over into the price contribution side of the business as well. We have interfaces which were started in algorithmic trading for Reuters and EBS AI, and we've extended that to trading interfaces to all the major venues like CurrentX, FXall. So we're able, through our connectivity manager solution, to send pricing into these venues for e-commerce, for clients trading on these platforms, and to take this pricing from pricing engines or algorithmic models and offer it out in streams, having done credit checks. So we're extending the coverage of our system across away from the STP side and into this price-making contribution side. We've also done a lot of work in liquidity aggregation, where we create an internal ECN within the bank of all its liquidity, and this can be used as a pool of liquidity for algo models to make hedging decisions into, for manual traders using our liquidity aggregation GUI to trade into, and also for order books to focus their orders into that liquidity pool. So we see this as a natural extension of DealHub, and again our customers are driving us in this direction.
Finally, what steps are vendors like DealHub taking to move FX deal flow management to the next level?
There are lots of conversations which were really triggered by the sudden spikes in volumes last year, and we think that 2009 will be the year when banks look at efficiencies and cost cutting in the back office area. So we're involved in areas such as pre-matching, pre-netting, which will take pressure off the back office systems. It's all very well and good sending a large number of tickets towards your back office. If it can't cope with those volumes, you have queues of unbooked tickets, which we can display in DealHub for the traders. But obviously this is building up in the system and causing backlogs. So we do a lot of work in queue prioritization, where we send the most important tickets down first. And we're involved in discussions. There are currently lots of discussions going on about the central clearing counterparty model. Is that more suitable for foreign exchange as we go forward after the recent credit problems? So this is very much our area. DealHub is ideally positioned in the space that we sit between the venues and the bank's back office systems to provide traffic to any of these solutions, whether it be CLS, LCH, or any of the other companies like CME that are going to offer these central counterparty propositions. So we see a lot of work to come in that area.
Great. Thank you very much for your time, Tim.
Thank you.